Introduction. Welcome to our channel. In today's video, we're diving into an exciting topic that's on the minds of many investors. The best 3 ETF portfolios for wealth building in 2024. If you're looking to grow your wealth over time, exchange-traded funds, or ETFs, can be a powerful tool in your investment arsenal. We'll explore what makes these portfolios stand out and how they can help you achieve your financial goals. Throughout this video, we'll break down each of the top 3 ETF portfolios, discussing their unique features, potential returns, and the strategies behind them. Whether you're a seasoned investor or just starting out, our aim is to provide you with valuable insights that can enhance your investment journey. Investing in ETFs is not just about picking a few stocks. It's about building a diversified portfolio that can weather market fluctuations and provide steady growth. With the right ETFs, you can gain exposure to various sectors, regions, and asset classes, all while keeping costs low. As we move forward, we'll highlight the importance of long-term wealth accumulation and how these ETF portfolios can serve as a foundation for your financial future. So, grab a notebook and let's get started on this journey to smarter investing in 2024. Understanding ETFs. Let's take a moment to understand what ETFs, or exchange-traded funds, really are and how they fit into the investment landscape. At their core, ETFs are investment funds that hold a collection of assets, such as stocks, bonds, or commodities, and trade on stock exchanges just like individual stocks. One of the key advantages of ETFs over traditional mutual funds is their lower expense ratios. This means you can keep more of your investment returns, as ETFs typically have lower management fees and no sales loads. Another significant benefit of ETFs is their liquidity. Unlike mutual funds, which are only traded at the end of the trading day, ETFs can be bought and sold throughout the day at market prices. This flexibility allows investors to react quickly to market changes, making ETFs a more dynamic option for many. Diversification is another strong point for ETFs. By investing in a single ETF, you can gain exposure to a wide range of assets, reducing the risk associated with individual stocks. This built-in diversification can be particularly appealing for those looking to spread their risk across various sectors or geographic regions. Finally, let's touch on the management styles of ETFs. They can be either passively managed, tracking an index, or actively managed, where fund managers make investment decisions. Understanding these differences can help you choose the right ETF strategy for your investment goals. Criteria for selecting ETFs. When it comes to building a successful ETF portfolio, understanding the criteria for selecting the right ETFs is crucial. One of the most important factors to consider is the expense ratio. Lower expense ratios can significantly impact your overall returns, especially over the long term. Additionally, examining the performance history of an ETF can provide insights into how it has reacted to market conditions in the past. While past performance is not a guarantee of future results, it can help you gauge the fund's consistency and reliability. Another key factor is sector exposure. Different sectors can perform differently based on market trends and economic conditions. By analyzing the sector allocation of an ETF, you can ensure that your portfolio is well diversified and aligned with current market trends. For instance, if technology is on the rise, you might want to consider ETFs that have a strong focus on tech stocks. Equally important is understanding your own risk tolerance and investment goals. Are you looking for aggressive growth, or are you more focused on stability and income? Your risk tolerance will guide you in selecting ETFs that match your comfort level with market fluctuations. For example, if you prefer a conservative approach, you might lean towards ETFs that invest in established companies or bonds. By carefully considering these criteria, you can build a well-rounded ETF portfolio that aligns with your financial objectives and risk appetite. Top 3 ETFs for 2024. As we look ahead to 2024, here are 3 standout ETFs that can help you build wealth effectively. First on our list is the Vanguard S&P 500 ETF VOO. This ETF aims to track the performance of the S&P 500 index, which includes 500 of the largest U.S. companies. Historically, VOO has delivered an average annual return of around 10% over the past decade, making it a solid choice for long-term growth. Its low expense ratio of just 0.03% allows investors to keep more of their returns, making it an attractive option for those seeking broad market exposure. Next, we have the iShares MSCI Emerging Markets ETF, EEM. This ETF focuses on stocks from emerging markets, which can offer higher growth potential compared to developed markets. Over the past 5 years, EEM has seen a return of approximately 8% annually. driven by the rapid growth of economies in countries like China and India. As global markets continue to evolve, EEM provides a way to tap into these dynamic growth opportunities. Lastly, consider the Invesco QQQ Trust, QQQ, which tracks the Nasdaq 100 index. This ETF is heavily weighted towards technology stocks, including giants like Apple and Amazon. With a historical average annual return of around 20% over the last decade, QQQ has proven to be a strong performer. As technology continues to drive innovation and growth, QQQ remains a compelling choice for investors looking to capitalize on this trend in 2024. Building your ETF portfolio. Creating a well-structured ETF portfolio is essential for long-term wealth building, and it all starts with understanding asset allocation and diversification. Asset allocation refers to how you distribute your investments across different asset classes, such as stocks, bonds, and cash. By diversifying your portfolio with the selected ETFs, you can reduce risk and enhance potential returns. For instance, combining a growth-focused ETF, like the Invesco QQQ, with a more stable option like the Vanguard S&P 500, can balance your exposure to both high-growth and established companies. As you build your portfolio, it's crucial to periodically rebalance it to maintain your desired asset allocation. Market fluctuations can cause your investments to drift from your original targets. A good rule of thumb is to review your portfolio at least once a year. If one ETF has significantly outperformed others, consider selling a portion of it and reallocating those funds to underperforming ETFs to keep your risk levels in check. Lastly, always keep your financial goals and timelines in mind. Are you investing for retirement in 30 years? Or do you have a shorter-term goal, like buying a home in 5 years? Your investment strategy should align with your objectives. For long-term goals, you might lean more heavily into growth-oriented ETFs, while shorter timelines may require a more conservative approach. By thoughtfully combining and managing your ETFs, you can create a robust portfolio that aligns with your financial aspirations. Common mistakes to avoid. Investing in ETFs can be a rewarding experience, but there are several common pitfalls that investors should be cautious of. One of the most significant mistakes is chasing past performance. While it's tempting to invest in an ETF that has recently delivered impressive returns, it's essential to remember that past performance does not guarantee future results. Instead of focusing solely on historical gains, consider the underlying fundamentals and long-term potential of the ETF. Another critical mistake is overtrading or reacting impulsively to market volatility. The stock market can be unpredictable, and it's easy to get swept up in the emotional highs and lows. Frequent buying and selling can lead to increased transaction costs and tax implications, ultimately eroding your returns. It's important to stick to your investment strategy and avoid making hasty decisions based on short-term market movements. Lastly, maintaining a long-term perspective is vital when investing in ETFs. Many investors fall into the trap of trying to time the market or seeking quick profits. However, successful investing typically requires patience and a commitment to holding your investments over time. By focusing on your long-term financial goals and resisting the urge to react to every market fluctuation, you can build a more resilient portfolio. Remember, investing is a marathon, not a sprint, and adopting a long-term mindset can help you navigate the ups and downs of the market more effectively. Conclusion. As we wrap up our discussion on building wealth through ETFs, it's essential to recap the key points we've covered. Selecting the right ETFs is crucial for effective wealth building, as they offer a unique combination of diversification, liquidity, and lower costs compared to traditional mutual funds. We explored the top 3 ETFs for 2024, highlighting their focus, performance, and why they stand out as strong investment choices. Remember, the importance of asset allocation and diversification cannot be overstated. By carefully combining different ETFs, you can create a balanced portfolio that aligns with your financial goals and risk tolerance. Additionally, we discussed common mistakes to avoid, such as chasing past performance and overtrading, which can hinder your investment success. As you embark on your ETF investing journey, keep these key takeaways in mind. Focus on long-term growth, maintain a diversified portfolio, and stay disciplined in your investment strategy. If you found this video helpful, we encourage you to subscribe to our channel for more insights on investing and personal finance. Don't forget to like this video and share it with friends or family who might benefit from learning about ETFs. Your engagement helps us create more valuable content for you. Thank you for watching, and we look forward to seeing you in our next video as we continue to explore the world of investing together.